Hello and welcome to Business Lunch. I'm Nisha Podar and with me as always is my co-anchor Pavitra Parekh. And let's begin with the markets then, and a quick look at the markets. The beginning of the week has not been good for the market. In fact, opened deep in the red and it has been a downward fall, almost closer to the low point of the day when we talk about the overall markets. Nifty 50 has lost more than 200 points, 17,500 odd levels right now, 1.2% loss when it comes to Sensex as well. When we talk about the other pockets like the financials, Bank Nifty is the one which is underperforming the key indices, 1.7% down at the moment, and mid caps are in tow with the key indices as well. So all-round weakness that is being seen, especially because of the global cues. Also today, rupee has depreciated further. Advanced decline ratio in the market breadth continues to look weak because of the weakness which is broad-based. But some of the counters which are still showing a green tick are coming in from the consumption space. The types of Britannia, Nestle, Tata Consumers, ITC with its contra call, and Coal India are some of those gainers still holding up in trade. Pavitra.
Oh, absolutely. It is only the consumption pack which is managing to see some green. That is the only sectoral index which is trading in the green. But outside of the Nifty, there are some of the Adani group stocks which are buzzing in trade. So those ones will be up for you, the likes of Adani Green. You also have Adani Power, which is in focus, and those ones are seeing some gains. On the downside, it is some of the pharma names that are leading losses. So the likes of Divi's Lab, Apollo Hospitals, and then the financials like Nisha mentioned. Also, take a look at some of the real estate names because that index is also under pressure today with individual players seeing deep cuts. So Sobha, Oberoi, these are just some of the names which are up on your screen. But pretty much all of the stocks from the real estate pack are seeing some cuts right now. Remember, this is quite an important week for us because A, you do have the FNO expiry, and then you have the Jackson Hole Symposium which starts on Thursday and runs through Saturday. So that is something important to track, and it is an important week in that context. We're going to come back to the market action, but first up, our top story. Dolo maker Micro Labs is in the eye of a storm over allegations that it distributed freebies worth over 1,000 crore rupees to boost sales of the paracetamol drug that was widely prescribed during the COVID treatment. Ekta is joining us with an explainer on how Dolo sales zoomed since the onset of the pandemic and what the allegations really suggest. Ekta, it's over to you.
Thanks for that. Well, yes, Dolo 650, which is the fever and pain-reducing medicine which shot to fame during COVID-19 and in many instances is now becoming the go-to pain-relieving drug, has come in the line of fire recently. Allegations brought up in the Supreme Court were that the manufacturer of Dolo, Micro Labs, distributed freebies worth around 1,000 crores to doctors to prescribe the 650 mg drug. Interestingly, during the period of March 2020 to Jan 2022, the oral pain market grew 23% due to COVID-19 related demand. Paracetamols were prescribed over other molecules such as ibuprofen to treat COVID. And it's during the COVID-19 period of around March 2020 to Feb 2022 that Dolo 650 mg rose to become the highest selling paracetamol drug. In fact, during this time, the Dolo brand, led by the 650 mg dose, grew to enjoy 22% share of the 3,100 crore worth of paracetamol-based drugs sold during the COVID-19 period, which means 22 out of 100 people were choosing to buy Dolo amongst all the paracetamol drugs during that time. And in terms of sales for Dolo, the 650 mg dose, despite being under price control or the national list of essential medicines, managed to generate sales of over 300 crores in COVID-19 during the period of March 2021 to Feb 2022. The sales in some cases touched over 10 to even 30 times of other comparative drugs in that space. So what could have happened? Interestingly, the Dolo 650 mg brand was launched in 1993, was one of the first movers in the market, and has at one point even enjoyed 80 to 90% market share in the 650 mg category. Eventually, the market share settled at around 50%. This has shot up to 58% during COVID-19. Interestingly, the Dolo brand sees this kind of stickiness only for the 650 mg variant, despite selling other mg variants as well, such as 500 mg. What tends to happen, doctors and experts point out, is that the brand becomes sticky. Keeping allegations of freebies aside, experts point out that 650 mg has in fact become a regular dosage for adults when it comes to paracetamol for years. And doctors tend to follow other doctors in terms of prescribing a drug, and this was possibly even more during a time of uncertainty, which was during COVID-19. Dolo, experts point out, grew because of the strong word of mouth, resulting in the brand almost becoming a default drug during this time. To illustrate it better, experts cite the example of Crocin. The drug enjoys one of the strongest reputations amongst the pain and fever relieving brands when there are many substitutes available. Similarly, Calpol is more associated with children but is also available for adults. And from the ibuprofen category, Combiflam is one of the top 100 brands in the country, whereas other substitutes don't see equal traction. Lastly, while the jury is out on whether or not Microlabs did dole out freebies, no pun intended, the company says the 1,000 crore figure is indeed data which is generated over many years across their 14 divisions and a 6,000 strong field force. In fact, the only freebies, according to them, that they did give out were the ones allowed, such as books, pens and small mementos. They say the company, meanwhile, says it is currently cooperating with the investigation.
All right, Ekta, thanks a lot for taking us through that entire explainer on the surging Dolo sales as well as what all of the allegations entail. In fact, we did speak to the management of Microlabs earlier as well to hear out what they had to say on all of these allegations. So let's listen into that.
We are in the process of compiling the data, but in any case, as I look at it, it will not cross 2 to 3% of our year's turnover. 1,000 crores for several years for across the division. But somehow it got picked up like 1,000 crores on Dolo 650 during COVID. Absolutely baseless. Any figures you look at it, even your presentation also made it clear. 350 crore brand, 1,000, and that to a brand under price control. 1,000 crores spending on that. It just doesn't. It wouldn't have made sense to any company. And obviously, it didn't make sense to us. We didn't do that. It has been found that we have spent 1,000 crores, and we are giving explanation on how we spent that 1,000 crores across the division for all brands. Once again, I would like to say that not for Dolo 650 is not under investigation or anything of that sort. It's only the reports which are come out which talk like that. Yeah, everything is under the law, and we have been law-abiding citizens all the time, and we are going to give that explanation, and that is going to be the thing. It's not anything worrisome or something. Whatever explanation is required, our company has been giving to the IT department, and we should come out clean. That's not a problem. Last year, we sold 362 crores of Dolo. That's the figure I remember very well. And probably the brand grew by about 80-90%. So previous year, it would have sold around 270, 260 crores. The previous year, perhaps 200 crores. No, that is what. We have been celebrating 150 crores landmark, 200 crores landmark, and 250 crores, and suddenly it jumped to 360 crores. We had a market share of 50% 6 years back for Dolo 650. And after the COVID, it has gone up to 58%. 8% shift in 6 years' time.
All right, so more clarifications coming in from Dolo 650 makers there. Moving on then, the market has corrected rapidly from Friday with weakness setting into the global markets. Earlier today, we caught up with Lawrence Belanco of CLSA, and he believes that short-term indicators look overbought and that there remains a downside risk from a medium-term point of view. Let's listen in.
Unfortunately, we've seen this pretty broad trading range for the Nifty year to date, roughly 15% wide. So we've really traded between 16,000 and 18,000 year to date. And the rally that we've seen off the June lows is now taking us into that resistance zone, which is basically the highs that you made back in March and the highs that you made in January. And in conjunction with that resistance area, we have some of our shorter term indicators flashing buying exhaustion. So that comes from our DMARC indicators. So we do think there's a downside risk for a correction within that range that you've seen year to date. We need to be aware that the upside risk isn't attractive here. And even if we just take it to the midpoint of the range, we have greater downside risk being capped at the 18,300 area. And our view for US markets is that we do think we retest the June lows, which does leave the Nifty vulnerable to fall back to that 16,000 area, which is where we've seen the lows develop in June as well as back in March. So there's definitely a risk of falling back to retest the lows. We think that is a likely event basically going forward. And the best case scenario is actually to find support at the midpoint of this range where the 200-day moving average sits, and that's roughly at the 16,800 area. Base case is that we have a 5 to 8% correction, which puts us roughly back in the middle part of the range. The Brent levels in the higher 80s, lower 90s, and we've essentially got a stability in a short-term double bottom pattern forming there. So we do think that oil is now stabilizing in the higher 80s, lower 90s, and the upside rebound is basically back towards the 115 area. That's within the context of a trading range that's developing between the higher 80s and mid 120s, 115, yeah. I was going to finish off with the dollar index. You know, that had corrected back to the 50-day. That's where it's found support. It has rebounded off that, and essentially looking at the continuation of the uptrend developing on DXY. And for rupiah, there's no change in our view. We think that does weaken towards the 82 area.
All right, that is the word coming in from Lawrence Polanco. He does see a downside risk, and he sees the base case for that around 5 to 8% in terms of a correction. But with that, we're going to get into a short break now. When we come back, we're going to talk about individual stocks that are moving around in trade, so stay tuned for that. You're still watching Business Lunch, and in its latest round of rebalancing, the FTSE has included Bharti Airtel partly paid shares and dropped Vodafone Idea, Aurobindo Pharma, as well as sale from the index. The changes will come into effect from the 16th of September. So Sonia is joining us now to tell us more about this. Sonia.
Well, thanks a lot for that. There are very interesting changes as far as the FTSE rebalancing is concerned. Now, Bharti Airtel's partly paid up shares have been added. And apart from that, a lot of stocks which have been doing really well have been migrated to the large cap category. So whether it's HAL, Tata Elxsi, TVS Motor, Varun Beverages, and even something like 197 Communication. Now, because of the FTSE rebalancing, the migration to mid-cap stocks includes names like CG Power, Gujarat Fluorochem, Indian Hotels, Schaeffler India, and Linde India. Now, the exclusions, let's talk about that. The migration from large cap to mid cap includes names like Aurobindo Pharma, Gujarat Gas, HPCL, Lupin, NMDC, Star Health, SAIL, and Vodafone Idea. As well as there are 24 stocks that have been added to the small cap category, and this comes into effect from the 16th of September. Back to you.
All right, Sonia, thanks so much for getting us all those important details. But flashes on your screen, and yes, some of the mid-sized banks, they are the ones who are increasing their lending rates as interest rate tightening cycle is on, especially from the central bank. So take a look at RBL as well as IndusInd Bank. Moving on then, Adani Power up 4.7% in trade at the moment, surges on the news of its impending acquisition of DB Power's thermal plant for a little over 7,000 crore rupees. In fact, Rima is here to share more details. Remember, amongst the big corporates, this is one such corporate which has really expanded by way of acquisitions, and while the deal market is slow, it's still carrying on. Rima.
Thanks so much for that. So as you pointed out, Adani Power has agreed to acquire DB Power Limited for an enterprise value of little more than 7,000 crore rupees, and Adani Power will pay DB Power in cash. Now, DB Power owns, operates 2 into 600 megawatts of thermal power plant in the Champa district of Chhattisgarh, and DB Power had annual revenues of nearly 3,500 crores as of last year. The reason for the acquisition by Adani Power is to expand its presence in Chhattisgarh, especially in the thermal power plant, and that's the reason for this acquisition. Back to you.
All right, Rima, thanks a lot for taking us through all of the details. But let's also bring you some important corporate commentary, and this is from the gold financing space. VP Nandkumar, Managing Director and CEO of Manappuram Finance, tells us that gold loans to lower economic segments are below the levels that we saw before the pandemic, and that they will keep the growth muted this fiscal. The company, however, says that it is not losing business to banks, which was a big fear and talking point. So let's listen into that.
What is happening is NBFC customers, mostly from the lower end of the pyramid, their demand has come down. They were typically the customers of an organized sector, and they are now our customers. So that segment is yet to pick up. It is started slowly picking up, but it has not come to that pre-COVID level. It is still lagging. We hope things will improve in the coming 2-3 months. Only from the existing customers, there is some sluggishness in demand. So what I look forward is in 1 or 2 quarters, the numbers will come back. Both growth will come back. And here onwards, we feel like it will slowly grow. This year itself, we expect from that stage to a growth of around 5 to 10% this year. Next year, our usual growth of 10 to 15% will be achieved. This is our expectation.
All right, another stock that is in focus today is Team Lease. It's trading in green today. And earlier today, we spoke with Ramani Datti of Team Lease Services on the key hiring trends that are really being seen playing out in the economy. Remember that at the current moment, because of the inflationary concerns as well as some of the economic pressure points, job creation is a big worry for the market. In fact, Team Lease said that they expect general staffing headcount growth of 18 to 20% in FY23. Listen in.
In the beginning of the year, we have expected very high demand from manufacturing, infra and engineering industries, maybe with the back of PLI schemes and other initiatives by the government. But unfortunately, we are not seeing that much of demand on the ground within manufacturing and engineering segments. We are planning to have at least 18 to 20% headcount growth in our general staffing business this year. So this is the minimum number that we are confident. In case if there is a recovery and better numbers by the festive season in Q2 and Q3, we may close with a slightly better numbers as well.
All right, that is the word coming in from the Team Lease management. But let's shift focus now to another important story that we're tracking. Sources tell CNBC-TV18 that senior officials of tech giants such as Meta, Google, Amazon, Apple, as well as Netflix are due to appear before a parliamentary panel on Tuesday on concerns over anti-competitive practices. Sources are also telling us that the Parliamentary Standing Committee has been looking into various aspects of competition in the market with special focus on technology giants. So do remember that just last month, the committee had summoned top executives of companies such as Ola, Paytm, Swiggy, Zomato, Flipkart and Oyo, all of them to discuss their market behavior following allegations of unfair market practices. So this meeting is tomorrow and we'll of course track that closely.
Oh yes, that will be very interesting, Pavitra, and we have seen that play out in the US Senate, by the US Senate, where the big tech was questioned, and now it's in India as well, and very rightly so. Let's, on that note, slip into a short breather on Business Lunch, but before we go, let's listen into Nilesh Shah, the Managing Director of Kotak Mahindra AMC, who says that he expects the Indian market to consolidate and see a bit of correction. He also says that global macros are not looking good at this point and advises retail audiences to hold on to their SIPs.
I think now the market has to take a little bit of respite and even correct a little bit. This will be driven by a variety of factors. One, the recently concluded quarterly earnings for June 22 quarter, that's marginally below expectation, driven mainly by some large stocks, and overall breadth of the earnings has been positive. So clearly market has discounted breadth of the earning, but it probably has to discount some disappointments in larger names driven in automobile or in oil marketing companies. Second, globally scenario doesn't look that good. There is a meeting at Jackson Hole where US Fed and other central bankers may try to be hawkish. That will weigh on the mind of the market. The only concern right now is that our valuation continues to remain above historical averages vis-a-vis our peer group. We have always traded at a premium, but today the premium is higher than our historical average.
Welcome back. You're watching Business Lunch. A quick look at the market and yes, holding right now steady in terms of the weakness when it comes to the key indices today. But there is a little bit of buying seen at the bottom, and Nifty 50 now still with 200 points downtake, 1.1% down at the moment. The financials are really not seeing any let up at this point, nor are the mid-cap universe. Moving on then, after the RBI released a discussion paper last week inviting the comments on charges for digital payments, well, the Finance Ministry last evening said that there is no plan yet to charge customers for payments made through UPI. In a tweet on the official account last evening, they said, the Finance Ministry said, and I quote, UPI is a digital public good with immense convenience for the public and productivity gains for the economy. There is no consideration in government to levy any charges for UPI services. The concerns of the service providers for cost recovery have to be met through other means. It added, the government had provided financial support for the digital payments ecosystem last year and would extend the same this year.
All right, that's some important news coming in. The Finance Ministry clarifying that they're not looking to levy any kind of charge on UPI payments. But with that, let's move on and bring you another important story. Just days after FIFA banned the Indian Football Federation and revoked its right to host the Under-17 Girls World Cup, the Supreme Court hearing the AIFF versus FIFA case has directed for elections to take place as per the concerns raised by FIFA. So the Supreme Court also held that the mandate of the court-appointed panel would culminate once the election process was completed. And the Apex Court says that the said orders will have been passed to ensure the prestige of the nation is upheld by hosting the World Cup. And the court also hopes that after all of these orders are passed, Indian footballers will be allowed to participate in the upcoming World Cup, which was supposed to be held in India. Of course, Nisha, we can also only hope for the same, that once these orders are passed, we are allowed to participate.
That's right. That's the development that everybody is watching out for. Let's wind up with an important global development and international scene which everybody is keeping an eye out for, and the follow-up on the Russia-Ukraine war at the moment. Now, as Ukraine gears up for its Independence Day this week, which coincides with 6 months of Russia's invasion of Ukraine, well, the country's President Zelensky has warned of bigger attacks from Russia, saying it may try to do something cruel as Independence Day approaches. Let's listen in.
We must be aware that this week Russia may try to do something particularly disgusting, something cruel. Such is the enemy of ours. But in any other week during these 6 months, Russia has done the same thing constantly, disgusting and cruel. One of the key tasks of the enemy is to humiliate us, Ukrainians, to devalue our capabilities, our heroes, to spread despair and fear, to spread conflicts. Hence, it is essential never, for a single moment, to give in to this enemy pressure, not to wind yourself up and show weakness.
All right, so that's an important global development to watch out for. With that, it's a wrap on today's edition of Business Lunch. Don't go anywhere. Mid-Cap Radar comes up right next.